This is Nightly Business Report with Tyler Matheson and Sue Herrera.
What a week. Drama in Greece, volatility in China, big swings in our market. So what should investors expect when the corporate earnings parade starts to roll?
On track. The head of the Federal Reserve says the central bank remains ready to hike rates this year.
New rules, how the change in our nation's hostage policy alters the game for people on the front lines in the fight against terror. The final part of our series, Held Hostage, the big business of ransom. Tonight on Nightly Business Report for this Friday, July 10th.
Good evening, everyone, and welcome. Hope in Greece, a rally in China, resulting in big gains on Wall Street. Investors were in a buying mood heading into the weekend as Athens appears to be one step closer to securing a bailout deal with its creditors. We'll have more on that in just a moment. And the continued rebound in Chinese stocks added to the positive tone. By the closing bell, the Dow Jones Industrial Average rose 211 points to 17,760. The Nasdaq gained 75 points and the S&P 500 added 25. For the week, which saw trading stop at the NYSE, big gains and losses in China, and Greece come face-to-face with bankruptcy, the major averages finished just about where they started. Should investors expect much more turbulence next week? Bob Pisani has the outlook from the New York Stock Exchange.
This has been one wild week in the markets, in the U.S., in Europe, and especially in China. Now, here in the U.S., the Dow Industrials has moved in a 250 to 300 point range from the high to the low every day since Tuesday. That's twice the usual volatility. And China, forget about it. The main China ETF in the U.S. moved down 20% in 2 days earlier in the week and then rallied all the way back. This ETF represents 300 of the largest stocks on the Shenzhen and Shanghai stock exchanges. It's like the Dow moving down almost 4,000 points in 2 days, then rallying all the way back. It's crazy. It's been volatile in Europe, too. Germany swung in a 6% range from the lows on Wednesday, when it looked like there would be no deal on Greece, to the close on Friday, when it closed at the highs for the month. Now, it's going to be another busy news week coming up. All the leaders of Europe will meet on Sunday to give thumbs up or down on the latest proposals for a Greek bailout. This would be the third one, by the way. The big fight will be over the level of debt relief that might be granted to them. And Janet Yellen will also be giving her semi-annual two-day testimony to Congress beginning on Wednesday. She'll be grilled on when she expects to begin raising interest rates. Other central bankers will be busy as well. The European Central Bank and the Bank of Japan will both be meeting. No one is expecting any changes in interest rates, but everyone will want to know what Mario Draghi has to say about any deal with Greece. And finally, earnings season begins with big banks like JP Morgan and Bank of America reporting. Get set for another wild week. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Well, the big focus this week really was in China, with U.S. markets very closely following the ups and downs of the Shanghai Composite. Overnight, that index rose by 4.5%. That added to yesterday's gains, following the extraordinary measures the government took to stem the market's steep losses over the past month.
And now to Greece, where that country's debt crisis may be nearing a resolution. Later tonight, Parliament is expected to vote on a reform package that Greece's leadership submitted last night, one that is much closer to what its creditors are looking for. Michelle Caruso-Cabrera reports from Athens.
The new Greek finance minister, Euclid Sakalotos, stood before the Greek parliament today and told the members to support the bailout proposal he gave to creditors late last night. It is nearly identical to the proposal his boss, Prime Minister Alexis Tsipras, told voters to reject less than a week ago in a controversial referendum. The new proposal includes billions in tax hikes and pension cuts. The parliament is expected to vote yes, leading to another round of protests from no voters tonight. Still, the business community is relieved. After 2 weeks without a working banking system, the Greek economy has pretty much ground to a halt. The CEO of Greece's largest electronic retail chain says the climate needs to improve fast.
I have to admit that this is the worst crisis I have seen.
And he's seen a lot. Elektroniki retail chain is 60 years old, started by his father. When this crisis started, he says sales fell to practically zero. Then, Greeks fearing a departure from the euro went on a panic buying binge to convert their euros into hard assets.
If there is an uncertainty of tomorrow, they prefer to have value in the house, instead of having money that they cannot know if this money can have the buying power like before.
Even if Greece's creditors accept this proposal and they get a deal done over the weekend, a huge amount of damage has been inflicted on businesses both large and small. Antonis Sisalis is a jewelry wholesaler servicing hundreds of shops across Greece. Despite the crisis, he still has lots of demand because it's high tourist season. But with the banks closed, there is little cash in the financial system.
We don't have cash from our customers, so we cannot take pure gold to make and producing.
But the electronic banking system is working. Why can't you use that?
Yes, but the people of they sell gold, they want it cash by hand, not by bank.
Angeliki Spanu was publisher of a small free weekly newspaper. In January of this year, she was getting 50,000 euros worth of advertising every week. A month ago, that fell to 30,000. Last week, zero.
Because the private sector is very much pressed from the condition in the banks, nobody pays nobody.
She shut down the newspaper. 15 freelance writers will be receiving one less check per week. For Nightly Business Report, Michelle Caruso Cabrera, Athens.
European leaders plan to meet in Brussels on Sunday to consider the fate of Greece and the bailout proposal, but ultimately any deal to give Greece a third bailout runs through Germany, and the politics there couldn't be more complicated. Steve Leisman reports tonight from Frankfurt.
Center stage is German Chancellor Angela Merkel, who faces pressure from the United States, France, and the International Monetary Fund to make concessions to keep the European Union intact. And she also faces a public opposed to any more Greek giveaways.
If finally, let's say, Merkel and the European, policymakers will give in, this would also finally conclude that Mr. Tsipras will finally leave the stadium as the winner. And this certainly is really complicated and is a big problem to digest for the normal people.
After Greece submitted an 11th-hour proposal for a bailout, leaders throughout Europe offered their opinions. But Merkel's government was glaringly silent. The unknown question is if the chancellor, who has guided her country for the past 10 years, would accept another round of promises from Greece and concede on the most critical point, giving the Greeks debt relief. Merkel's finance minister, Wolfgang Schäuble, known to be more hardline than his boss, for the first time on Thursday said the Greek economy needed debt relief. But he said such relief was against European Union rules. The mystery over the German position should be revealed tomorrow. That's when finance ministers meet in Brussels to decide whether to accept Greece's proposal. And then on Sunday, EU leaders meet formally to decide on the bailout. If it's turned down, it could mean the ultimate exit of Greece from the currency union. For Merkel, it's a choice between siding with her foreign allies or siding with her public. For Nightly Business Report, I'm Steve Leisman in Frankfurt.
To the U.S. economy now, where another report reinforced the view that economic growth rebounded in the second quarter after a weak first. Wholesale inventories rose at their fastest pace in 6 months in May. The Commerce Department said inventories increased 0.8%, which was better than forecast.
Federal Reserve Chair Janet Yellen gave no indication that the drama abroad in Greece or in China will delay the central bank's plan to hike interest rates in the U.S. later this year. In a speech in Cleveland today, she said the Fed was on track for its first rate raise in nearly a decade. Hampton Pearson untangles the Fed speak for us tonight.
In a speech to the City Club of Cleveland, Fed Chair Janet Yellen would not say whether she anticipates one or more rate hikes at the 4 remaining meetings of the central bank this year. It all depends, she said, on more workers coming back into the labor market and more signs of stronger economic growth, including improvements in what she described as an underperforming housing market.
I expect that it will be appropriate at some point later this year to take the first step to raise the federal funds rate and thus begin normalizing monetary policy.
In an effort to ease market anxiety over interest rate liftoff, the first rate hike in nearly a decade, Yellen said Wall Street and Main Street should focus on the very gradual path of interest rate increases after that.
I currently anticipate that the appropriate pace of normalization will be gradual, and that monetary policy will need to be highly supportive of economic activity for quite some time.
Earlier this week, minutes from the mid-June Fed meeting showed monetary policymakers concerned about the Greek debt crisis and the economic slowdown in China. Not so today. Yellen said calls by IMF Director Christine Lagarde for the Fed to hold off on raising interest rates until 2016 is part of the interest rate policy debate inside the FOMC.
The members of the Federal Open Market Committee publish their own individual forecasts of the appropriate path of policy, conditional, of course, on their economic forecasts. You will also see a range of opinion there. And so it is part of the spectrum of opinion.
Today was, in many ways, a preview of the Fed Chair's semi-annual report to Congress on monetary policy and the economy. That happens next week during 2 days of hearings here on Capitol Hill. For Nightly Business Report, I'm Hampton Pearson in Washington.
Still ahead, the FDA strengthens the warning on well-known pain relievers. But will it impact the big money behind those popular pills? What do you reach for when you have a headache or some muscle pains? Well, like millions of Americans, you probably head to the medicine cabinet for some Advil, Aleve, or maybe Motrin. Now the FDA is strengthening the warnings on this class of painkillers, and there's a lot of money on the line for a lot of well-known companies. Meg Terrell has the numbers.
The FDA's stronger warnings will appear in the coming months on popular over-the-counter medicines like Motrin, Advil, and Aleve, as well as prescription drugs like Celebrex. They're in a class of painkillers known as NSAIDs, non-steroidal anti-inflammatory drugs. They already carried information on heart attack and stroke risk. The new warnings are more specific, saying those serious side effects can occur as early as the first few weeks of use.
Your risk goes up the longer that you're on it and the higher the dose. So for most people, if they're not getting any benefit, they don't need to take these medications to begin with. But if they're getting a benefit, then you have to weigh the benefit against the risks.
NSAIDs are big business for drug companies. Pfizer's prescription medicine Celebrex drew $2.5 billion in sales last year, according to researcher IMS Health. In total, more than 100 million prescriptions for NSAIDs were dispensed. For over-the-counter drugs, the numbers are higher. Americans bought more than 275 million boxes of over-the-counter NSAIDs in 2013, amounting to $1.7 billion in sales, according to retail tracker IRI. Major makers include Johnson & Johnson, Pfizer, and Bayer. Analysts say the warnings are unlikely to affect the stocks, though the FDA hopes it does affect consumer behavior.
I know some people just, even though they have little pain, they'll just go ahead and use Advil. That probably might change a little bit.
Probably use it less or find an alternative.
That may change the way I use it, like on a normal day, maybe.
The FDA says those at highest risk are people who've had a heart attack already, though it notes the risks exist for anyone. It doesn't say these drugs shouldn't be used. Its advice is to use the medicine only as directed and take the lowest effective dose for the shortest amount of time possible. For Nightly Business Report, I'm Meg Terrell.
Aspirin and Tylenol aren't included in the warnings. The FDA says people who take low-dose aspirin for protection against heart attack and stroke should know that some NSAIDs can interfere with aspirin's protective effect. Tylenol has known risks as well. Overuse can lead to liver damage.
Well, Cablevision rallies on buyout interest, and that is where we begin tonight's market focus. The cable operator was the best performer in the S&P 500 today. This following a Wall Street Journal report that the French telecommunications company Altice is interested in buying it. Shares popped more than 7% to 26.67. American Airlines also higher on June results. Traffic last month jumped, outpacing a rise in capacity. That's a key industry metric. Shares rose nearly 4% today to 41.21. United Continental also reporting an increase in June traffic, but the airline lowered its second quarter outlook, saying it expects its pre-tax profit margins for the second quarter will be at the low end of the range of guidance it gave. The company blames a strong dollar. Shares were 4% higher to 55.51.
General Motors is recalling nearly 800,000 crossovers. This after it discovered a defect with its power liftgate that had caused at least 56 injuries. The company saying that the liftgate may wear down prematurely, calling it to fall too quickly. Shares were more than 1% higher at 31.40. And Lockheed Martin is reportedly in advanced talks to acquire the Sikorsky helicopter unit from United Technologies. A deal between the two companies could be worth more than $8 billion. Shares rose 1% to 194.19.
Believe it or not, it was the biggest week of inflows into U.S.-based mutual funds this year. Investors poured more than $14 billion into U.S. stock funds in the week ended July 8th. This according to Thomson Reuters' Lipper service. Funds that specialize in U.S. shares attracted most of that new cash.
And now to our market monitor, who, like stocks, she says, are changing the way the world works. This is her first time joining us on the program. She is Kathy Wood, CEO of ARK Investment Management. Welcome, Kathy. Nice to have you with us.
Thank you, Sue. Happy to be here.
So it sounds like you kind of like what they typically would call disruptor companies. Is that a correct read?
Yes. We focus on disruptive innovation. That's our starting point. And we're looking for companies that are going to change the way the world works. So we spend a lot of time with technologically enabled companies, and we're looking for the key enablers, the size of the market, and where the economics will lie.
And yet, some, Kathy, of your choices tonight are companies with which many of us would be familiar. So you don't really say that these disruptors have to be found at the sort of infant or guppy stage. Let's start with Amazon.
Yes. We think Amazon is a much bigger idea than people understand today. Its market cap is now approaching that of Walmart's. We think it's going to surpass Walmart because we think online sales, which are now less than 10% of sales, are going to grow much larger. Amazon is leading the charge. And then they also have their technology business. Amazon Web Services, which is infrastructure as a service, is changing the way companies are using technology. Infrastructure as a service is taking care of a lot of corporate needs.
Next on the list is LinkedIn. Why do you like it?
We love LinkedIn because they're helping to solve a lot of problems. First of all of us use LinkedIn in our professional networks. We don't know what we would do without LinkedIn. HR manager, human resources managers are also very dependent on LinkedIn. We think with the trend towards robotics and the need for education and retraining, that LinkedIn is going to become even more important. They just bought a company called lynda.com, which helps to retrain people. And we think with all of the big data that LinkedIn has, that they're actually going to help people improve their opportunities for careers and step up to the next level faster than they might otherwise.
And your third choice is another stock sort of in a way like Amazon, in that I guess you believe that it is underestimated, misunderstood, and not commonly known as well as it should be. It's NVIDIA.
It's NVIDIA. It is painted with the PC brush. Everybody assumes that it's hostage to the PC cycle, which is in actual, not just a cycle, it's in secular decline now. NVIDIA is so much more than that. It is the leader in chips for parallel processing, which is used in all of our themes. So anything having to do with the cloud, parallel processing is critical. Anything having to do with genomic research, DNA sequencing, parallel processing is critical. It's becoming much more involved in automobiles, and as we move towards shared autonomous electric vehicles, it's really going to be the chip that helps the car see when there's no physical driver.
Very interesting, Kathy. Thanks so much for spending time with us. Come back soon.
Pleasure. Thank you so much.
Kathy Wood with ARK Investments.
And coming up, what the nation's changing hostage policy could mean for the companies trying to keep Americans safe overseas. The final part of our series, Held Hostage, the big business of ransom, is next.
And here's what to watch for next week. Earnings season will be in full swing with major corporations reporting, including Dow Components, JP Morgan, Intel, and General Electric, among others. Janet Yellen, as we told you, heads to Capitol Hill, where she will deliver her semi-annual testimony on monetary policy. And a ton of important data, including 2 indicators of inflation, are due out: a read on the health of housing, industrial production, and more. It's a busy week. That's what to watch for next week.
The drought-stricken state of California is seeing a 50% jump in the number of fires this year, and this is happening with less water to fight them. Water levels have fallen, and some sources may be now too low to tap for firefighting. And as Jane Wells tells us, that is prompting firefighters to get creative as the cost to fight fires soars.
Here's how weird it's getting in California. A famous actor is accused of stealing water in a drought from a fire hydrant for his avocado trees. Then Caltrans tweets this photo showing it suddenly snowed in the Sierra going into Yosemite Valley in July. And the state has seen far more fires starting earlier and burning faster than firefighters expected.
We're over 53% higher than we were even last year.
So far in 2015, there have been well over 3,000 fires in California, and the cost to fight them is soaring. This time last year, CAL FIRE had already spent $240 million fighting fires. This year, it's $286 million, almost 20% more, and the hottest, driest months are still ahead.
We're finding that we have to travel further to find water. We're finding reservoirs that boat ramps aren't even long enough to get to where the water actually is that we need to pump out for filling our engines.
Super scoopers, which need a long runway of water, are settling for the ocean, assuming the Pacific is close enough to get to. And while new technology is helping firefighters find and fight the flames, they are also finding new ways to do it with less water.
There will be more what we call dry mop-up type of activities, meaning we'll use very little water, use mostly dirt and hand tools to scrape away hot spots.
Maybe Mother Nature will finally help. An El Nino weather pattern is expected this fall, which could bring rain and finally give firefighters a rest. For Nightly Business Report, Jane Wells, Los Angeles.
An update now on that massive Office of Personnel Management data breach. The director of that agency resigned today in the wake of the theft. As we told you last night, the personal information of more than 22 million people was stolen from the agency. The deputy director of the management at the Office of Management and Budget will temporarily fill the top spot until a replacement is found.
The biggest discount broker by trade executions experienced a technical issue today. TD Ameritrade said trading was interrupted for some investors using its platform for a short period. The company said the problems were caused by a software update. It was done overnight and were resolved a short time later. This comes just 2 days after the New York Stock Exchange shut down for nearly 4 hours because of complications associated with its own software upgrade.
What would you do if a loved one was ever taken hostage in a foreign country? You'd probably want to pay the ransom. Well, until recently, families didn't have many choices, but the White House has since made some changes to the nation's hostage policy. Eamon Javers has the final part of our series, Held Hostage, the Big Business of Ransom.
It's one of the most dangerous countries in the world.
Mexico is really a major problem for us, both from the kidnapping crisis response and the extortion side.
But for Americans,
American citizens, in my opinion, are most in danger in areas where there is Islamic militancy and terrorists.
And the president recently had a change of heart and policy when it comes to hostage negotiation. President Obama's new executive order means that the United States government is no longer going to be in the position of threatening the families of those people who've been taken hostage. The U.S. government says its position hasn't changed at all. The U.S. government is not going to negotiate with terrorists or hostage takers. Still, this new development is seen as a potential benefit to the kidnap, ransom, and extortion firms that are already out there helping victims. Critics say the opportunity for ransom payments could make hostage taking more profitable for the bad guys.
It's good for their business, potentially.
So who's it bad for?
It's bad for the Americans who are traveling. The government wasn't prosecuting to begin with, and it didn't necessarily have to be publicized that they were going to be doing this.
So these kind of headlines make you nervous?
Absolutely.
That could potentially mean more business for insurers like Travelers,
We get a lot of international companies, of course, U.S. organizations that are conglomerates, mining organizations that might have assets or properties overseas, oil and gas exploration companies as well.
And companies like Olive Group, one of the leading providers of kidnapping response.
I think one of the most important things is that they've got to have international experience, either ex-military or ex-government service, some law enforcement, police or FBI.
The longer the negotiation takes, the more money hostage negotiating companies make.
The most important expense is to bring on a crisis consultant.
As far as the payout? Give me a range.
Roughly 50 grand.
Where's the most expensive place in the world to be taken hostage?
Those areas that are most difficult to get to. It comes down to, what is the motivation for the kidnapping and what is the ultimate end game.
For Nightly Business Report, I'm Eamon Javers in Washington.
And finally, tonight, a happier story to tell you about, a parade down the Canyon of Heroes in Manhattan's financial district. The women of the U.S. national soccer team made history again today with the first ever New York City ticker tape parade celebrating a women's team. Since the women's soccer team won its third World Cup title on Sunday, there has been, by the way, a 3,000% increase in sale of U.S. women's national team merchandise at the sports apparel site Fanatics.com. Congratulations to them. If anybody deserved a ticker tape parade sports team, they did.
Yeah, very proud of them. That's it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for watching.
And I'm Tyler Matheson. Have a great weekend, everybody. We'll see you back here Monday.